Hello, everybody. I hope everyone has had an amazing summer. I know most kids are going back to school now, so many parents and adults are getting back into the groove of things and getting back to the markets and starting to trade again. So I expect the market volumes to return pretty soon. For today, I want to get started by just checking out a few currency pairs and kind of going over my routine that I like to do on Sundays. All right, so let's get into it. So the very first thing I like to do is I like to check out Forex Factory. I like to look for news to see if anything big has come up that I should be aware of. Because sometimes over the weekend, there's big news that comes out, and the markets don't react to them until Monday or sometimes even Tuesday. But we did have something pretty big happen last week, and that was the US dollar was downgraded from a AAA rating down to a AA rating. And that is a very big deal. Uh, the wild thing is the market hasn't really reacted to it yet. We also had NFP last week. So, we were dealing with the payroll reports from the US, and that kind of took the place of the US dollar's credit rating being downgraded. So I expect sometime this week for the market to react to that because that's a very big deal. Anytime a country's credit rating is downgraded, that means the currency of that country is also devalued, which means in the US, we can expect to start seeing rising costs because, you know, it's just the US dollar is just going to be more expensive. Um, think of it as your personal credit score. Anytime you borrow money, if you have a lower credit score, then your interest rates are going to be higher. Well, the same thing is going to happen with the US dollar in regards to the debt that we owe to other countries. And when it comes to imports, exports, it's just going to be more expensive for the US dollar, which means it's going to be more expensive for us consumers. So I expect that sometime this week, the market will react to that. And what I'm looking for is the calendar to kind of get an idea as to when that might happen. So when looking at this calendar, we can see there's a big holiday in Australia. So um, this really isn't a big deal. I am only concerned when I see big holidays in like the UK, like London, Euro, and the US dollar, obviously. Those are what I'm kind of concerned. But with the Australian dollar, I'm not that concerned because during the Australian session, the volumes are low anyway. So that really doesn't impact the markets that much. Uh, Canada, maybe a little bit, but not too much of a concern. I think the market will still move pretty well today, and yeah, today. Well, depending on where you are. I am in Georgia in the US, and right now it's 2:23 a.m. So I think in the UK it's around 8 or 9 o'clock in the morning. So I don't think that this is a big deal with Canada having a holiday. But let's just look at this week. This week is looking very light, and it's not until Thursday we have some big news on the US dollar. So it will be interesting if the market uses this opportunity to show the effects of the US dollar credit rating being downgraded. Because anytime you have inflation data, this is going to trigger some big moves, and we can see change in price of goods and services. So this is going to be very interesting how this plays out, because I can't imagine that nothing is going to happen. Now, what is also very interesting is everyone is thinking the same thing, right? So if you're thinking like I am, and you're thinking, okay, well, the US dollar is going to be downgraded, so that must be bad for the US dollar. So what does everybody do? What tends to happen is everyone starts to short the US dollar, and the US dollar currency pairs end up being instantly oversold and overbought. So even though the market should be doing one thing, it tends to do the other, simply because there's just too many people trading in the same direction. So in times like this, I like just following what the market is telling me on the candles, and just kind of go from there. So let's get into it. So the first currency pair that we're going to look at today is going to be gold. So right now, I have my break of structure and change of character setup. So this is what I looked to go to first. This is a great setup when you have ranging conditions, or if you have trending conditions. With break of structure, you can identify pullbacks pretty well, and you can identify trends pretty well. The only time I don't like using this setup is when the market is consolidating, because then, it's too hard to identify a break of structure or change of character. But as you can see, gold is moving pretty good at this time. So this is looking like a strong bearish trend on gold. So let's take a look at this. So I love the DMI indicator on TradingView, because this red line represents bearish momentum, and this green line represents bullish momentum. This green line is the plus DI line, and this red line is the minus DI line. And this black line right here represents the strength of, is kind of like a confirmation. So the stronger this black line is, means it's determining how strong the overall trend is. So let's give an example here. So we can see here, oh yeah, and another thing is when the lines cross, that triggers a signal. So right here, you see a cross. So when the green line shot up here, this means this is a buy signal, okay? And then when you see this black line shoot up, that's telling you that this is a very strong buy signal, okay? And as long as this green line is above the red line, then that's bullish momentum. So you can see right now we are at a very interesting position in regards to where this price is. So it looks like the red line is about to cross, meaning the bullish momentum is dying down and the bearish momentum is about to take over. We can also see CCI, which measures momentum, is going down. So all of this is pointing towards a downtrend or strong bearish momentum. And as soon as this red line crosses this green line, then you can see it's a strong sell signal. And once this black line curves up a little bit, we can see that the confirmation will be even stronger. Now let's get into what we see here. So this right here is the baseline chart. I like using the baseline chart because it gives a good visual for if the sentiment is bearish or bullish. So you see how this shadow is all red? This is basically saying this is all bearish territory. So once it crosses this dotted line up here, that's when it crosses into a more bullish sentiment. So, it's pretty far away from that. So that means we're in a pretty strong bearish territory at the moment. Okay. Now, when you look at the breakup structure here, so we have a high here, and then I guess you have a low here, lower high, low, and then lower high. So all of this is just telling us strong bearish momentum. And let's look at just the candles so we can get a better visual as well. So this is just basically saying the same exact thing. Now, this other indicator that I use here is the Bollinger Bands. Now, one nice secret about Bollinger Bands is you see how this lower band right here is curving up. 90% of the time, when this lower band starts to curve up, that's a sign that the price is going down. So we can see that this lower band is going up. The middle band in Bollinger Bands represents the value. So you can see here that the candles are far below that middle band, which is telling us that the true price of gold at the moment is going down. It's not able to sustain the value above this line. And, pretty much every single indicator that we're looking at from this aspect is saying downtrend. Right here, gold was overbought. And we know that it was overbought because we have these candles breaking outside the upper band. And the way we know this is also overbought is if you look straight down. So if I move my mouse straight down, right here, the CCI shot down. So if you look here, the price was not overbought here. Even though the candle was breaking above the upper band, you can see the CCI was still shooting up. But then on this second candle, a different story. Because now the CCI is going down, which means the momentum is going down. So, between the DMI, between the CCI, between the Bollinger Bands, between the candles, we have a strong breakup structure, which means it's a strong trend. Gold is basically bearish. And my thoughts behind it is most people are probably thinking with the US dollar, with the US credit rating being downgraded, gold should be bullish. And I actually think it should be bullish, to be honest, right? Because there's no reason why the US dollar should be so strong at this moment. But in these types of situations, when the price is overbought, because there's just too many people trading in the same direction, this is what typically ends up happening until enough people are wiped out and things are balanced again. So what I'm looking at is for gold to drop down to this level. So once it reaches this support zone, if gold continues going down, then we can look at gold dropping below 1900 if that happens. So if this support zone around 1932 is broken, and if we see a lower low below 1925, I think we're looking at gold dropping below 1900. So for me, the way I'm trading this right now is I am selling gold at the moment, and I'm just going to see what happens. So let's check out one of my accounts here. So the count that I am opening up is going to be my MetaTrader 5 account. This is with the funded trader. This is the monthly challenge right now. And you can see here, my trades are doing pretty well. So All right, so the Australian dollar 90% of the time does the opposite of gold. But because of this interesting situation, I'm actually selling the Australian dollar, and I'm also selling gold. So, but normally I wouldn't trade both of these in the same direction. But that's why you have to understand Forex enough to know, okay, wait a minute. I know that I should be trading gold in the opposite direction of Australian dollar. However, this is a very unique situation because gold sometimes does its own thing, because a lot of traders, for some reason, when it comes to gold, uh, a lot of people have a lot of bias, I think. So at the moment, this is what I am going for. So I'm looking to take profit around 0.6500 with the Australian US dollar. I'm not sure if it's going to reach that far because as you can see, it's going to be a pretty big drop. I have to go all the way to the daily time frame to see it. But again, let's just look at the charts and let's just look at what it's saying. So, the MACD is, is giving a sell signal, and this is on the daily time frame. We do have a slight change of character. However, well, a slight change of character with the CCI, but I don't think this is going to hold based off of what I'm seeing here. If we go to the 4-hour time frame, look at that. So this is kind of confirming what we're seeing here. So the CCI is going down, and it looks like the candles are going to break below this middle band and drop below that value line. And let's go to the 1-hour time frame. So we have a bearish hammer right at the value there. So I think the Australian dollar has reached its highest point. And on the 1-hour time frame, we see a strong sales signal here. So this is a very juicy setup. This is why I like MACD. So we can see here, MACD was saying, hey, the price is overbought right here, right? So right here was when MACD gave a sell signal. And you can see here, it's been a sell signal for a while. Now, when it comes to the Australian US dollar, when it falls into a bearish momentum or a bearish trend, the bearish momentum is very strong. And if you look at this, this is typically what happens with the Australian US dollar when it becomes bearish. So I think right now I'm in a very good spot with this position because I think it's going to have a drop all the way down to at least here. And once it gets down to here, I'm expecting the price to probably be around 65,300, somewhere around there. And I think a lot of people are going to start buying around this area, and the price will be instantly overbought, which is going to force the price to drop down even more. So those are some of the things that I'm looking at in terms of what I am currently trading at the moment. Let's see here. So this is something that I recommend doing every now and then when it comes to protecting your profit. So right now, I'm not going to touch anything, but for those of you who are watching, and when you find yourself in situations like this, where you already have quite a bit of profit built up, I recommend coming here and securing some of the profit. So what I'll do here, just to kind of just show you guys, it's not a big deal. So I'm going to change this to 4, right? And then I'm going to close. Oh no, I want to sell 1. And then this way, this position right here will turn to 4 standard lots instead of 5. This way I can secure some profit for the day. So I hit close, boom. So now we can go to my history, and you can see here, I secured $150 for the day, and I still have, and now this open trade that had 5 standard lots is now down to 4. So it should be pretty good. And I'm pretty sure gold is going to be fine. So let's just do a double check here. I don't have MACD set up on my trading view. So this is perfect, right? So we see here, MACD was saying the price was overbought in this area, and then it just triggered a sell signal right here. And as you can typically see, when gold is in a downtrend, it's in a strong downtrend, right? So once the bars fall below the 0 line, I think it's going to be bearish for a while. And I think it'll be strong enough to take us below 1900. All right, so let's see. Let's try and look at another currency pair. Another one I like looking at is the Euro US dollar. Oh, this is a juicy setup too. I've been so focused on gold, I wasn't even thinking about this one. So this is a perfect time to sell. So you see here, the minus DI line just crossed. This right here is a sell signal. Look at the CCI. The CCI is plummeting down. The candles are below the value line. This lower band on the Bollinger Bands is shooting up. So, I think I'm going to take a chance here. I wish I was watching this earlier, but this is actually a perfect time to place this trade anyway. So let's go here. And we're going to do the same thing. We'll do 5 standard lots as well. And for the stop loss, let's do 1.1. I don't think it should reach that high. And we'll do 1.09. Let's just do 400. That should be a safe area to take profit here. And anytime, if you haven't learned how to calculate pips, all that kind of stuff, the easiest thing to do is just hover over the dotted lines, and you can see if my trade hits the take profit, it'd be a profit of $1,785. If it hits the stop loss, it'd be a loss of 1,215. But I think we're pretty good on this one. Let's look at the 15-minute time frame. The bearish momentum is just sky high. So I think it's going to be pretty good. And you can look and see on the US dollar, this is actually where the price is. So you can see here, the candles is going straight to that area. So what I think is going to happen is the price is going to drop down to this area, and then it's going to start to consolidate. And it's probably going to consolidate for a while. And it could very well consolidate until Thursday when we have some big news on the US dollar. So that is what I'm looking at today. So one of the things I recommend using is your notepad that's on your computer. So if you want to keep track of trades. So for today, what we discussed was gold, TP. We want to take profit at 1920. If gold drops below 1920, it may drop below 1900. And then with the Australian US dollar, we're looking to take profit around 0.6500. So this one you might have to watch a little bit. I think 6,500 is a pretty big target in this case. But if you see here, yeah, 65,220. So 65,300, 65,400 is probably a safer bet. And then that way you can be sure that your trade can close. Or you can go with what I'm doing and you can use 6,500 for your take profit. And then when you check your trade later on, if your trade has not hit your take profit yet, but you see it's at like 0.65200, then you might want to just go ahead and manually close it. All right. I am not putting the stop loss because you want to use your stop loss based off of your risk requirements for your own personal account. So when it comes to trading, always go based off of your guidelines. All right, and then the Euro US dollar was the third one. And there's probably even more juicy setups as well. So this is a nice time to really look at the markets and see what's going on. But we're going to take profit at 1.09400. Strong support zone, and price will most likely consolidate at that price. So normally my notes are a lot more comprehensive, but I'm trying to keep it simple. So the more you do this, the more you understand and the less you have to write. So if you're brand new to trading, or you're kind of like you've been trading for a little bit, but you're still like a novice, one of my recommendations would be to write everything out. Make sure that you're aware of the overbought and oversold areas. Make sure you're aware of the support and resistance areas, because these are things that, as an experienced trader, I'm already looking at those types of things. I don't have to think about them consciously, because I just know what to look for and what to do. So this happens when the price pulls back a little bit. So don't panic when you see the price pull back a little bit. It's perfectly normal, perfectly fine, and it happens a lot. So trust your analysis, trust that you've done your due diligence, and then let everything play out. If your trades hit their stop losses, don't worry about it. And this is when it comes to making sure you're following your own risk management guidelines. Because in the worst case scenario, if my trades hit the stop loss, I can recover from the losses because it's not going to be the end of the world. But some people get carried away, especially when they use a prop firm account, and they just start doing a lot of reckless things. Okay, so that's all for today. And for the most part, I think today and tomorrow and Wednesday will be kind of calm. I'm not expecting too much to happen. So that's all I have for now. And thank you for checking out my channel. And I'm going to keep this going every week. I'm going to look to do an analysis video every Sunday or Monday. And that's all I have for today. Thank you for visiting my channel. Please like and subscribe, and I'll see you guys later.